How do you see SIFs different from mutual funds, PMS or AIFs?
Mutual funds are not allowed to short. If I have a negative view on the market, then I cannot take a view on that market. But combining the advantages of all mutual funds, PMS and AIFs all put together in a simple format. It's an extremely innovative way which the regulator is allowing retail investors to participate in some strategies which are normally not available to them in a very, very nicely regulated format. That allows the fund manager a lot of flexibility and innovation to try and improve returns for the investor.
The significance of long-short strategy in SIFs. What do you feel about this?
An extremely powerful innovation. Now, I can find up to a certain percentage of the portfolio, up to 25%. I can short stocks, what you call naked shorts. There is no such strategy in the mutual fund market available today, which is where SIFs are a separate vehicle. Depending on the type of instrument you are in, you will be taxed accordingly. So in that sense, yes, this gives you that advantage of mutual fund taxation, which is very, very good for strategies like SIF strategies, because there is a fair amount of active management that will take place in strategies like this.
So SIF in one word.
Innovation.
And biggest misconception about SIFs?
I think taking that they can take leverage.
SIF's portfolio depend more on direction or strategy?
Strategy, very clear.
Welcome everyone. This is Sandeep from SIF 360, India's first and only dedicated platform to simplify and track SIFs. Over the past few months, something remarkable has happened in the India's investment landscape, the SIF category, which many believed would take time to gain traction, has already crossed 3,000 crores of AUM in just 2 months, attracting serious participation from the sophisticated investors and leading AMCs. And this is only the beginning. I genuinely believe SIFs will be one of the biggest growth engines in the India's wealth ecosystem over the next decade, bridging the gap between the mutual fund and the alternatives, while empowering fund managers with freedom and investors with smarter access. At SIF 360, we have been tracking this since day one, and the momentum is far bigger than the people would realize. Today, we have one of the best minds in the industry to break it down, Raghav Iyengar, CEO 361 AMC. Welcome, Raghav, to our special episode where we are going to explain what SIFs are. So if you can tell me what exactly SIFs.
So firstly, Sandeep, thank you so much for calling me on this podcast. I know this has taken some time. I hope it is worth it for all your viewers. SIFs, the full form is very simple. It's Specialized Investment Funds. So this was a new type of investment vehicle which was launched by SEBI in February 2025, which allows more flexibility to the managers to try and give returns to the investors, basically.
Okay. And how do you see SIFs different from mutual funds, PMS or AIFs?
That's a very good question, Sandeep, because I think what these regulations have done is very interesting. See, the mutual funds, as you know, had a certain set of limitations, right? For example, mutual funds are not allowed to short. If I have a negative view on the market, then I cannot take a view on that market. I mean, the only thing I could do, for example, was to either stay in cash or maybe stop taking money.
Absolutely.
PMS and AIF had strategies which allowed you to take a call to try returns for investors by using shorts. What SIFs has done is actually combine that and put it into a mutual fund type scheme. So just think of SIFs as a very, very highly regulated vehicle, very transparent vehicle, very investor friendly vehicle, but combining the advantages of all mutual funds, PMS and AIFs all put together in a simple format.
Wonderfully explained, Raghav. Thank you so much for this. And why is the introduction of SIFs an important milestone for India's investment landscape?
See, I think, as you know, the Indian mutual fund industry is the first mutual fund was started by UTI a long time back. We have now come of age. We are now almost an 80 lakh crore industry. And this allows you to do slightly more enhanced strategies to try investor returns, right? So if you ask me, SIFs are a very, very unique way of it's an extremely innovative way which the regulator is allowing retail investors to participate in some strategies which are normally not available to them in a very, very nicely regulated format.
Yeah, thank you. Yeah, that helps a lot for, the retail investors who are looking for that differentiation. And here, a simple explanation how the SIF structure works for a first-time investor.
It's very, very similar. In fact, full form of SIF is nothing but Specialized Investment Fund. right? So it's not specialized investment, anything else. So just think of it as a mutual fund, a separate scheme with all the obligations, rules, responsibilities that are there in a scheme of a normal mutual fund. Same thing applies here. It's just that you're allowed to do a little more extra things in terms of the investment, which you can't do in a mutual fund, number one. Number two, as you know, the minimum investment per investor in a SIF across a mutual fund is 10 lakhs. And number three, which is very interesting, is that I can construct and design my own purchase and redemption periods.
Right.
Like, in a mutual fund, you have to declare the NAV every day. You have to give repurchase and purchase facility every day. In an SIF, that flexibility has been given to the manager. So I can do, for example, a daily purchase but a monthly redemption. Or I can do a weekly purchase and once in 3 months redemption, depending on the type of the scheme.
Okay.
So that allows the fund manager a lot of flexibility in and innovation to try and improve returns for the investing.
So the significance of long-short strategy in SIFs, what do you feel about this?
No, so it's, as I said, Sandeep, it's an extremely powerful innovation. Because let's say today, what have mutual funds tried to do? We're trying to get alpha by using long-only portfolios.
Exactly.
Which is, in a simple language, I'm trying to find a set of stocks which, because of research, because of our capabilities, will try and do better than the market.
Yeah.
But they're all long-only positions, right? I'm hoping when I buy a stock that the stock price keeps going up.
I agree.
With SIFs now, I can find up to a certain percentage of the portfolio, up to 25%. I can short stocks, have what you call naked shorts.
Yeah.
So I can go and find a set of stocks which maybe the process is telling me is overvalued and try and create some money and try and create some return out of that strategy too. So that's the significance. There is no such strategy in the mutual fund market available today, which is where SIFs are a separate vehicle. You have to have a separate brand. You have to have its own set of regulations. But overall, the mother regulations are exactly similar to a mutual fund.
Thank you, Raghav. Do you see the SIFs generating alpha over the mutual funds since they are, associated with derivatives and they can go short too? Do you see any alpha?
It again depends on the type of scheme that you're talking about. So as you know, there are 7 types of schemes which the regulator has prescribed. 3 in equity, 2 in hybrid and 2 in debt.
Right.
If you stick to the equity and hybrid, my sense is that within those individual categories, against the comparable, say benchmarks, there is a possibility of generating alpha. But it also depends on 2 big things. Also on how the fund manager is taking certain calls. So experience of the fund manager is very, very critical. And more importantly, how do you structure your long-only bets, which is the larger part of the portfolio.
Absolutely, that's very
important. So do you have a
important.
research process for it? Do you have a track record for it? And those things are also extremely critical when you're trying to do this.
Right. And do you see the downside risks too, since we have talked about the upside, which can help when they are going short? Do you see any downside risks if the market is going up, where SIFs could be riskier than mutual funds?
See, the thing is, again, it's very individual, right? Again, it's how a fund manager is trying to create that additional return for the investor, right? So if you're in a structural bull market, there is a possibility that if the fund manager goes short and the stocks keep rising, you may not lose some money, you may lose some return basically in the process, right? But having said that, Sandeep, I think think of this as a product which can possibly give you equity returns, but with much lower volatility and lower risk because of the shorting.
So what should be the ideal horizon for an investor who is looking to invest in SIF?
No. So as I said, this is very similar to an MF, right? So it's the same answer which you would give when you're investing in a mutual fund scheme. And this is all very individual, Sandeep. So there's no textbook answer for what may be right for me may not be right for you, right? So all I'm saying is that each person should sort of do their own financial analysis, look at what the horizons are. There are, as I said, a variety of options available under F. It's not one single scheme. There are potentially 7 schemes which are available to you.
Right.
Please marry your time horizon and select the appropriate scheme.
Yeah, based on individual
risk parameters. So as I said, you could go from really low risk funds to all the way up to high risk funds. So you have the entire. If I were to draw a 180-degree curve, you could have the entire spectrum is available to you today. So it has to be done on an individual basis, which is where I think podcasts like this really help. Because I think an investor then gets to understand what it is about and then marry his or her risk, reward and return expectations with the type of scheme that they are putting into.
Yeah, I 100% agree with you, Raghav, because generally I have seen investors, they talk about, more returns. Which fund is the best fund?
Correct.
So a fund which is, for me, it's the best fund could not be a better fund for you. So it's always based on the risk.
There's nothing called a best fund, right? I think
Yeah.
ideally for me, the best fund is something which is consistent and true to label.
Yeah.
See, these are two very important things for me. So if I'm calling myself an equity fund, am I really an equity fund? Or am I using something else to prop up my returns?
Yeah.
Now, the advantage of SIFs is that it gives you much more flexibility to design and create a slightly better investment outcome. Right. But yeah, time will tell as to how those additional tools get utilized by the fund managers.
Thank you, Raghav. And Raghav, where do you see this SIFs fitting into the overall portfolio allocation?
As I said, like mutual fund schemes with additional investment and redemption repurchase benefits, obviously meant for 10 lakh plus investors. So if you ask me, I would, over a period of time, this would, from my sake personally, this could be a really core part of my allocation. Yeah. Okay, because in some sense, this is a bit of a fill it, shut it, forget it product for me. Why I will tell you, Sandeep, it's very simple. Today I'm very worried when market starts falling.
Yeah.
Right.
Which has happened in the last 1 year.
It is the nature of equity, right? Sometimes, things go up, they come down, and I know our viewers also know that that's the intrinsic problem of equities, right?
Yeah.
So when markets start falling, people get worried because that's when you start seeing no returns or negative returns.
Yeah.
And then you start comparing it with things which are not really comparable.
Yeah.
Like the last 1 year, I have started seeing comparisons of equity funds with bank deposits.
Yeah.
Frankly, it's like comparing oranges and apples. It's very, very different, right? So hopefully in this product, because of the ability to short up to 25% of your portfolio,
right,
there is some positive action that can be taken even if markets are falling.
Yeah.
So if the fund manager gets his or her strategies right, there is some return that can be derived even in a falling market.
Right.
Number two, because these are hedged, in some sense, hedged portfolios. Because your portfolio value is nothing but long minus short.
Yeah.
So in that sense, it sort of reduces your risk a little bit, which are two very important things when an investor is looking at.
Okay.
And because they are equity oriented or hybrid oriented, you get some capture of the market when it's going up. So if you ask me, I think it's early days yet. I think, but over the next 2-3 years, this can be a really big core part of your portfolio. Yeah.
Thank you. And Raghav, I have a follow-up question here. If you feel like SIF can be the part of your total portfolio allocation, but is there any drawdown which an investor should keep in mind if the SIFs can deliver, maybe can go this much down? Is there any drawdown?
No, that's what I said. I think, like I said, Sandeep, like everyone knows today, I think thanks to people like you, that you don't put equity for short-term periods.
Yeah.
Right? So the same logic should be applied in SIFs too. So if you have really short-term money, try and look for a scheme which is slightly less risky. Try and see if it's diversifying across 3, 4, 5 more asset classes, which will help. If you have medium-term horizon, obviously you should put something into a hybrid fund. And if you really have long-term horizon, you are able to take risk. Then of course you have equity long short and equity X100 long short, right? Available to you to decide what you want to do. I think the important thing is for the investor to first understand those categories, what they're doing.
Right.
And more importantly, ask the question as, hey, what happens if the market goes down?
Right.
Do a bit of ask that question to whoever is talking to them about the product or wherever they are reading about it. And once they get satisfied with the answer, that's the time to sort of put some money in.
Right. And Raghav, do you have any option in the SIF space where an investor can invest through SIP?
Yeah, it is possible. It's just that today we have a 10 lakh rupee limit, minimum limit. Not per strategy, but across a single AMC, right? So if let's say hypothetically we launch 4 funds, an investor can give technically 250, but all 4 have to be launched at the same time.
So the minimum investment has to be 10 lakhs per PAN per AMC.
Per AMC. If I'm launching only one strategy, then 10 lakhs becomes the default amount. And so the same thing can be done even through SIPs and SWPs also.
Yeah, because this is the most frequent question that our investors
are asking.
No,
it is there. Obviously, I think the SIP values will be a bit higher, but that facility is very much there. Like I said, Sandeep, just think of these as slightly more advanced financial instruments, but put into a very, very transparent and regulated mechanism called mutual funds.
Right.
So just think of these schemes as being an addition to mutual fund schemes today. So whatever is available in a mutual fund, in some sense, will be available here. Obviously at a slightly higher ticket size compared to a normal mutual fund.
Will SIFs become a mainstream hybrid investment category?
I hope so. I think, because of the reasons I talked about earlier, that this gives you more flexibility to the fund manager to do things. I think like everything else, Sandeep, these things take time.
Mm-hmm.
Having said that, the experience of hybrid investors has been quite positive.
Right.
Especially if you take the last 10-15 years data, hybrid funds have grown quite rapidly. So I call it a great stepping stone for somebody to get into the investment world. So imagine somebody who's wanting to do things in a long short format but is not very comfortable getting into pure equity because they are a little worried as to, hey, if the entire thing gets shorted and maybe if the decision is not correct, then maybe they should graduate up by going into hybrids first. The second most important thing is marry your investment with your time. It's very, very simple. So if your time is not very long or you have a slightly lower risk appetite, then yes, hybrids are there. And there is a lot of investments who are people who are not really looking to, make huge amount of money. They just want decent returns with some principal safety.
Yeah, especially in these kind of markets.
Of markets. And I think hybrid funds in some sense solve it for you because they are lower risk compared to normal equity funds. So I think hybrid, long answer to a great question. But I think it can be definitively a very large category.
Yeah,
definitely.
And also I would like to mention here, Raghav, even the investors, their demands have gone down. Now they are comparing the returns of mutual funds with their FDs. Like last couple of years, we have seen the markets did not do well. And post these 2 years before that, the returns were like exorbitant when the markets delivered 30%, 40% returns. But now it has also migrated down and now investors are comparing with the FDs. So which is really a good sign that you have a decent expectation. And when the returns are over-delivered, you are always the happier receiving end.
Absolutely agree.
Yeah. And where do you see this SIF aligning with 361 AMC's investment philosophy?
So I think we've been managing money for quite some time now. We run some very large mandates for large institutional investors abroad. We have almost 2 lakh folios in our regular mutual funds. The interesting is the same philosophy applies here. So we are growth oriented. We research more than 600 stocks. We have a proprietary investment system.
Right.
And within that, we classify them into secular, cyclical, defensives, and value traps. And our fund managers are constantly looking for stocks which can technically be a secular stock over a period of time.
Right.
So we've had a reasonably good track record over the last decade plus in some of our funds.
Yeah, we have seen that.
And we are happy to say that we got our in principle regulator approval.
Oh, that's wonderful.
To launch our specialized investment funds under a sub brand name called Dyna.
Okay, that's great.
So Dyna is an offshoot of the word dynamis in Greek, which means dynamic.
Okay.
And because of the nature of this product, like you rightly said, it's long, it's short. You have to be constantly innovating in these set of products. That's why we decided to call our set of 361 SI funds, we're calling them Dyna SIF.
Oh, that's so interesting. I would like to appreciate your marketing team.
I think, yes, thank you. I'll tell them. I think they'll be very happy to hear that. So it's that, so we've got our in principle there. It aligns very closely to our philosophy because I think we believe Indian equities are a great source of wealth creation, not only now but for the decades to come. I think, as you know, India is the fastest growing large economy in the world.
Yeah.
I think we've just cemented that. The numbers which came out last week were really great.
Yeah, absolutely.
And I think corporate results are reasonably good. I think there is positivity. I think we have a terrific set of regulators, a terrific set of policy makers, and they are always looking out for ways to improve. Right.
Yeah.
And I think that's really positive. So given all those factors, I think India is a great long-term destination.
Right.
And within that, obviously, SIFs are a great way to participate in that wealth creation journey.
Right. I 100% agree with you, Raghav, on this. And Raghav, just to add here, like, where do you see this SIF ecosystem going forward in the next 3 to 5 years? Like, what could be the size of this market?
Very difficult to predict, Sandeep, because if somebody had told me, I've been in this industry now for a very long time.
Mm-hmm.
When I joined, the whole industry was less than 1 lakh crores.
Yeah.
And today, it's close to 80 lakh crores.
Yeah.
And it's not too long ago. I'm not talking of 100 years back. This all happened in the last 25, 30 years, right?
Yeah.
In fact, since the last 10 years itself, the industry is almost up 7 times.
Yeah.
I think the important thing is that we have to deliver decent risk-adjusted returns for our investors.
Right.
And if we deliver that consistently,
Mm-hmm.
I think the category can go anywhere.
Right.
See, India does not have a savings problem.
Mm-hmm.
I think as a nation, we are a nation of savers.
Right.
It's inculcated in us.
Yeah.
Yes,
absolutely.
of course, there is this new buzz about consumption and spending, etc. But
yeah, especially after COVID.
After COVID, but heart of hearts, even today, I think savings as a habit is deeply inculcated in us.
Yeah.
I think products like this will only help convert some of those savings into investments,
Yeah.
which is very, very good long term for the country,
Mm-hmm.
very good for the economy, and obviously very good for the investor.
Yeah.
So SIFs are just another part of that, I would say another part evolved product. It's a very, very innovative product, which I think our regulator has come out with in a beautiful format to allow retail investors to participate.
Yeah.
Typically, such strategies are given, or if you were to look at, maybe comparables, such strategies are largely institutional investor strategies.
Yeah.
So the kind of money that is being talked about, minimum 10 lakhs,
Mm-hmm.
I think is something that they are expecting even retail investors to get in.
Yeah.
But at the same time, not really first-time investors.
Mm-hmm.
So I think the expectation is somebody who's got 10 lakhs is
Yeah.
possibly has some experience of capital markets
Right.
and hence is able to take a more
Mm-hmm.
educated view or a more studied view of SIFs as a total.
Yeah.
So I think it's a great balance of innovation with the right customer in a nice, lovely regulated format.
Thank you so much, Raghav. Coming this from a fund house and a senior leader like you from the industry, when you are advising people to invest some of your funds in FDs and also taking health insurance and life insurance, I really appreciate it for this honest advice. So, Raghav, where do you see this balancing growth and risk management while designing SIF strategies?
I think it's inbuilt in the product, Sandeep, because up to 25% you can short.
Yeah.
And then it's up to.
Okay.
It's 0 to 25. So
Okay.
technically you can be 0 if you want to.
Okay, so if I'm bullish view, then I can go 100% long too.
You can. There's nothing to
thanks for
stop you.
clarifying.
There's nothing to stop you from a regulatory perspective.
Okay.
That's your call. It has to be obviously documented as to why you're doing it. But there's no minimum requirement to go short.
Right.
And then, of course, it depends on the various type of strategies that you are.
Mm-hmm.
So obviously, you can't go beyond 25%. So obviously, if you're in a hybrid, you will have equity, long plus short plus debt.
Right.
If you are in a multi-asset, you will have equity plus other asset classes,
Right.
maybe commodities, and then plus something. So I think again, depending on where you are in the risk-return spectrum, you should decide and place money accordingly.
Right.
Also remember that these investments have the same level of taxation that a mutual fund scheme has.
Oh yeah, I was about to touch that point.
Yeah, so if you keep it for more than a year, 12.5%. If it's more than 2 years and it's a hybrid type of a fund,
Right.
with minimum 36% and above non-equity, I think you can have 12.5% for 2 years.
Oh yes.
So I think that's the great thing in this product, because the fund manager is not getting taxed for his or her movements within the portfolio.
Right.
The investor will get taxed only at the time of redemption,
Mm-hmm.
and obviously depending on the period will pay that tax rate.
That's very interesting. This seems to me like AIF light kind of thing, where you are getting those flexible options. Fund manager has the flexibility and independence to behave like he's managing an AIF fund, and at the same time, you are investing in SIF. You are paying taxes based on retail investment like a mutual fund. So I think this is the best of both worlds.
It's an interesting combination, because it does. I think ultimately your returns have to be your post-tax returns. Let's also be clear about it.
Exactly. That matters a lot.
There is an element of tax which you have to pay.
Yeah.
Right? So there's no point in saying I made 20% return, and you will be a little, and depending on the type of instrument you are in, you will be taxed accordingly. So in that sense, yes, this gives you that advantage of mutual fund taxation.
Right.
Which is very, very good for strategies like SIF strategies, because there is a fair amount of active management that will take place in strategies like this.
Right.
And hence it is beneficial from a long term to the investor. But also don't forget, Sandeep, that these are all super regulated also. My personal sense is that I think our industry has done so well in the last, 10, 15 years is also because we've had a set of people who really had the right regulation at the right time.
Right.
And have monitored the industry really well. And they keep monitoring. It's not that they've stopped, obviously. And
Right.
they're very clear that you have to grow, but you have to grow in a very regulated format.
Right.
Right. So I think the same. So that way it's great from an investor perspective.
Yeah, agree.
And for the regulator, the investor is number one, very clearly.
Absolutely.
It's not the fund house. It's not the manager. I mean, you have to protect the investor interest very, very clearly.
Absolutely. And I also feel, Raghav, why these SIFs are getting traction, since we have already collected more than 3,000 crores in few funds in the last couple of months, because earlier the PMS ticket size was 50 lakhs and an investor was not ready to, bang on one fund manager. Now they have, flexibility.
Absolutely.
They can divide those 50 lakhs and give it to 5 different fund managers, and then they can decide who is doing what.
You can.
So that is helping a lot, And also, Raghav, where do you see this SIFs are primarily attracting HNIs, family offices, or are they going to be popular with the retail investors too?
I think it'll go across the curve, I think it'll go everywhere.
Yeah. So
because you will get really high ticket investors like institutions. You could get family offices. You could get, obviously, I won't call it retail, but I would say affluent investors.
Yeah.
Right. And I think it's a great stepping stone, because somebody who makes a little bit of money in the mutual fund side wants a slightly more advanced investment strategy, can migrate to SIFs.
Yeah.
And then obviously, hopefully migrate upwards from there to AIFs. I mean, that if you ask me, that's the chain.
Exactly. Yeah.
The most flexible investment instruments today are AIFs.
Yeah.
But yeah, they come with their, in terms of ticket size and everything else. The best in that sense for retail investors today are mutual funds, because they're very well regulated.
Right.
You can come in with very low ticket sizes. And obviously, so this is sort of in the middle, actually, if you ask me today. And then if you add the regulation, you add the tax, you add the manager, you add the additional strategies that are possible in an SIF, I think this can become a really big, this can fit investment needs for all types of investors, Sandeep.
Yeah, so just to reiterate, means
you don't have to be like a 100 crore investor to participate in SIF. I mean, you could be a 25 lakh portfolio investor and yet be able to put money into 2 SIFs, technically.
Exactly. Means the investors here, they are enjoying both birds, but they are enjoying the flexibility like AIFs and taxation like mutual funds. I think this is the best thing about SIFs. What we hear from the investors themselves. Like they are going ahead for SIF investment because of this flexibility.
It's interesting, very interesting.
And how investors can educate themselves about SIFs?
I think do more. I think education is now very personal, Sandeep.
Yeah.
So 2 things have become very personal. One is your investments. So I can't come to you with advice and say, Sandeep, you are 30 years old, so you should have 70% of your money in equities. Those rules are gone.
Yeah.
I mean, they're good places to start, but ultimately, if you were planning your own finances, you know your finances best.
Yeah.
And sometimes it's not necessarily that a 30-year-old person can take more risk than a 70-year-old person.
Yeah.
Maybe the 30-year-old person has got a housing loan.
Excellent.
And of other responsibilities which are not, for which they cannot take that level of risk.
Yeah, yeah.
Whereas maybe a 60-year-old person may not have those responsibilities and is able to take more risk. So I think investing has become very, very personal.
Yeah. So it depends on the individual situation.
And education in that sense has also become very personal.
Right. Yeah.
So you can't, I think the important thing to understand is that you have to do a little bit of studying, reading, listening on your own. And I think thanks to podcasts like this, it's a great use of your time. In fact, I see most of my colleagues in the office, the younger guys especially, they don't crib about traffic anymore.
Oh, really?
Yeah, they're very normal about it. They say, 1 ghanta lagta hai, abhi kya kare?
Right.
And I
so
guess
they enjoy podcasts.
They enjoy podcasts. I mean, if you go, and this is very normal. I mean, if you go abroad, you will find people will listen to, they're listening to something. I don't know what they're listening to. My sense is it's podcasts.
Yeah.
And obviously podcasts like this really help educated people.
Yeah.
Because I'm sure at some point of time you will get the fund managers to talk. That will be of a different level of strategy, of complexity.
Right.
We are having a general conversation.
Yeah.
So you make out that different. So there might be somebody who says, okay, I know about the general stuff. I don't need to listen to this podcast. But hey, here's a fund manager podcast I like to listen to.
Yeah.
So you can literally customize it as per what you want to do. And that fits beautifully with your investment because your investment is also very personal.
Right. Yeah.
तो आप सुनो जो आपको ठीक लगे. It's very simple. Instead of me coming and telling you, नहीं ये आप 10 चीज पढ़ो.
Right.
या आप 5 चीज सुनो. No, that's not the case. So I think it's very, very important. I think self-learning is very critical today.
Yeah, absolutely. I agree, Raghav. Raghav, would you like to bust any myths or misconception that people have about SIFs?
Yeah, I think the big one about SIFs that I keep hearing about whenever I do stuff like this is, hey, how much can you leverage the portfolio?
Yeah.
So I can't do options in this portfolio. It's not that I have 10 rupees and I can make that 10 and put 100 in the market.
Right.
That's not regulatorily allowed. So I think that's the biggest myth. That हाँ sir, I'll give you say 10 lakh rupees.
Right.
Will you put 1 crore in the market? I said no, that we can't do. If you give me 10, if you give us 10 lakhs as investment,
right,
we'll be able to put that 10 lakhs only as 10 lakhs, not multiply it or not leverage it out.
Right.
So I think the biggest misconception is because this has something to do with derivatives, and because so many of our investor friends are doing F&O.
Yeah.
The common misconception, Sandeep, is that आप derivatives कर रहे हो तो you can obviously use F&O to sort of multiply your investment value, which is not allowed.
Okay.
I want our viewers,
listeners
to be very clear about that.
Yes,
basically.
I agree with you. Like this is the biggest misconception that investors have. Yeah. Like this is going to be risky, like normal derivatives trading. Like you are buying an option and leaving it to expire. So that's not going to happen, of course, in the SIF. Yeah. And Raghav, do you see that 361 AMC in investor awareness and education, role of SIF 360 in investor awareness and education on SIFs?
No. So I'm a big fan of digital IEPs, boss. I think the reach is very tremendous.
Yeah.
And I would love to do more like this because it just expands the reach. And I think digital is in some sense the new personalized learning.
Right.
Not that I think classrooms are bad. I think classrooms are equally important.
Yeah.
But I think there are various stages in an investor's learning journey.
Yeah.
And if you ask me, the most democratic stage is podcasts.
Yeah.
Because everybody can listen to it at his or her convenience.
Yeah. Now, Raghav, I would like to ask you, like, since you are one of the greatest mind in the industry.
No, I am no great waiter. No, please. Let me be very clear about it.
So, what's your view on the market for next 3 to 5 years? My horizon is longer.
I'm a perennial bull, yaar. I'm sorry. Okay. It's very difficult to be in this business if you're not positive.
Yeah.
So let me start with that disclaimer. Right?
Yeah, sure.
You could have asked me this question 2 years back.
I can understand.
When the market was at its last peak, and I would have given you possibly the same answer. Having said that, I think very importantly, as I said, you have to get your basics right. And obviously first is your emergency fund, your health, life insurance. And then obviously you have to plan your investments a little well.
Yeah.
Now, one way to do it is to obviously keep listening to stuff, do it yourself. The other way is to find a good trusted financial partner. Who will hold your hand during a financial journey. Both work.
Right, yeah.
Both work, right? And in fact, I know some of the largest investors all have very, very good people advising them on what to do. So it's not that just because you're a large investor, you don't need advice. And vice versa, because you're a small investor, you don't need advice. Actually, it cuts both ways. So I think that's important. And then obviously some sense of where you want to be in your life 5, 10, 15 years out is very, very important. Number 2, I think it's like in everything else in life, if you have to be successful, you have to be a bit disciplined.
Right.
I think the good thing in our industry is that now thanks to SIFs, people are saving first and spending later.
Exactly, yeah.
That's a huge maybe 25 change. Years back, at least when I started my SIFs, and I'm a very bad investor from that perspective. I hardly saved in my first 10 years of my career, which in hindsight is a very expensive mistake.
Yeah.
Because I never had money in the end of the month. Thoda bahut jo bach jata tha, I would put it.
Right.
I think today investors are very smart.
Yes.
They're putting most of their money. That's why if you see, statistically, most of the money that comes into SIPs come between the 1st and the 10th or the 12th of the month.
Right.
In fact, I think 60-70% of the flows finish off by 10th or 15th.
Yeah.
Like today is possibly the best day for SIFs.
Oh yes.
If you were to go and look
Absolutely.
at the industry,
Yeah.
the first of the month is fantastic. So that's a great sign for me that investors have become really smart. That pehle save karte hain and then they do it. Number two is be a little patient, especially when you're in equity. Which again I am very thrilled. The investor is doing very well. I mean, last year 3 months back somebody told me, "Aap dekho, aapka industry mein SIP abhi will start falling." Because last 1 year return is whatever, negative, flat, zero, whatever. It's just going up. So that means the investor is patient.
Yeah.
Because equities unfortunately behave like that, Sandeep. You know it better than I do.
Yeah.
They don't go in a straight line up.
Right.
They go,
Ups and downs
they have
are
their
there.
ups and downs, and sometimes corrections are good for the market. It gives people a base. But what I find worrying sometimes is that especially new investors start something 7-8 months later, they stop.
Yeah.
And they say, yaar, isme paise nahi ban rahe, we are just flat. And then they tend to, in fact, that's the worst time to do it. Because you're accumulating units at a slightly better price.
Right.
So you should, in fact, the most money that I've made in my life is when I invested in a bad market.
Right. Yeah. That's why the SIPs are the best
SIPs
choice.
come, because then you're not really worried about timing the market. You're not
Yeah.
worried about upar hai, niche hai. It's just some money is going every month.
Yes.
It's not making a big impact in your life. Yes, you feel sad. 1-2 साल के बाद sometimes अरे यार इतना पैसे चले गए, no return. Then you start thinking of what if.
Yeah.
But that's not what you should do. So my belief in life is work hard, make as much money as you can, pay your taxes, have a good life, spend money, but also save. And then leave that saving, give it to good fund managers like what I do.
Yeah.
I'm blessed to be working with some very, very smart people.
Right.
And hopefully they'll do a good job. At least better than me.
Of course. So Raghav, one message for young investors building wealth.
Yeah, that's a difficult one for a very average investor like me. I think start early. Please start. I think the most important thing is to start. Aajkal ke investors are very, very, I think we have a lot of knowledge.
Right.
It's actually completely reverse of what used to be maybe when I started, when I was a young investor. We didn't have that much knowledge.
Yeah.
We took a leap of faith and we invested.
Right.
We didn't have all the stuff. We didn't have a Sandeep. We didn't have SIF 360. We didn't have all the IP. Kuch nahi tha us time pe. We just said, hey, this feels good. Let's go and do it, right?
Yeah.
And obviously, sometimes you made money, sometimes you didn't make money. I think the important thing today is absolutely reverse, Sandeep.
Yeah.
Like investors have too much information. And because of that, they get a bit paralyzed. They're very confused. Are ye karu? Then they read something, they listen to something, next year, ye nahi karte, kuch aur sochte hain.
Right.
And then they go back and forth. And in that process, they're losing time. They're losing time. So the most important thing is don't lose time. Wo वापस नहीं आएगा.
Exactly.
So whatever you decide to do, and trust me, you won't get 10 on 10.
Yeah, absolutely.
The best investment gurus don't get 10 on 10. Right? You talk to any large fund manager or any really big investor,
Right.
and they will not, nobody will tell you, hey, we invested in 10 stocks and we made money in all 10. There will be some. So if the largest and the best guys can't do it, now with AI also helping them, so aap as a retail guy, you will never get it.
Right.
But what you can get is put money to work. So please put that money to work. No?
Yeah, I agree. So one key takeaway for the SIF listeners.
I think it's a very innovative product. It's since it's part of the entire mutual fund scheme, it comes with all the advantages to a retail customer in terms of regulation, but it's also very innovative. So as I said in the beginning, Sandeep, it combines the best of all the strategies that are possible today in a tax-friendly, regulated format. So yes, but given that different managers will have different styles, the outcomes will be very, very different. Could be.
Right.
Let's say in a balanced hybrid category, people could do other things with their investment style. So not to get worried about it. As long as study a little bit of what the product will do, marry that to your line of thinking. If it fits, invest it, and then treat it like a great investment and forget about it for some time.
Right.
Don't look at it every 3-4 दिन में को check app है वो सब मत करो. आप अपना काम करो.
Right.
You know, it's better to go out on a social outing than to spend unnecessary time on this. Yes, definitely review your portfolio.
Yeah.
साल में एक बार करो.
Right.
If you're a very, very hyper investor, साल में 2 बार करो.
Right.
But if you're looking at your portfolio, Sandeep, every day, that
Yeah.
means you should not be an investor, you should be a fund manager.
Yeah, absolutely.
Our
yeah.
fund managers
We
do
should
that
not
every day. Unka
overdo
kaam hai.
it.
Unka kaam hai.
Yeah.
The fact that you're giving it to them means allow them to do their job.
Exactly. Your advisor has to do this
Advisor,
job, or your fund manager
or
is there.
assistant. तो आप साल में एक बार देखो, if your broadly your investment objectives are being met, छोड़ दो.
Yeah, because this is passive investing. If
Absolutely.
you want to, actively participate, then
That's a
stock
different
market
life.
is there.
Obviously,
to
there
go
are
and
so many
do.
things to do there. Yes,
Exactly.
correct.
So, on the demand of our viewers, we would like to do a rapid fire round with you.
Super, great.
So, SIF in one word.
Innovation.
Okay. And SIFs for beginners or for informed investors.
Informed investors.
One advanced SIF that have over traditional mutual funds.
Investment strategy.
And biggest misconception about SIFs?
I think taking that they can take leverage.
Passive investing or an active risk management.
I'm an active risk manager, yeah.
Which matters more, stock picking or risk management?
Actually, both are important, if you ask me, but risk management is very critical.
Right. One danger investor underestimate is,
He gets higher over expectations.
right? And SIF's portfolio depend more on direction or strategy.
Strategy, very clearly.
Thank you, Raghav, for sharing these valuable insights. I'm sure that investors and even the mutual fund distributors, many doubts have been cleared by these sites that you have shared today. Our endeavor at SIF 360 is to keep doing this such awareness programs where our viewers can get insights into the SIF ecosystem. And we also believe that this is just the beginning of this hemisphere, and this is going to go big. In next 2 to 3 years, maybe we would see maybe 10% of the mutual fund AUM is going to shift to SIF.
I hope so. Let's see. Yes.
Thank you for joining us here
Thank you,
today.
Sunny.
Thank you to all our viewers. If this episode gave you value, hit like, share it with someone who needs clarity, and subscribe, as we are going to bring the biggest names in the SIF ecosystem right here. Stay informed, stay invested, stay ahead.